The markets have been just crazy. Man, this election, guys, has been nuts. Oh. Markets, though, for the week go bullish. Up, 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 up. But we end the week on a bearish note, but not by much. NASDAQ's up, everybody else down. And silver higher, gold higher, Bitcoin over 15,000. What? Insane. All right, let's take a look here at the markets. The S&P, we start off there. Just so you guys know, for you guys who are new, I've been trading in the live markets 23 years. Using technical analysis, been doing it a long time, over 2 decades. Mark the Meerkat, full-time day trader is what he does. And then Romulus, 14 years hedge fund manager. So we are traders first, educators second. That's why the videos aren't overly produced. All right. Outside of giving you the finest of technical analysis that's out there today, we feel, but we're highly biased. Let's get to it. The S&P 500 going sideways. Up, 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 up. Going sideways, sideways, sideways. This is kind of like a flat bullish flag. If you don't know what that is, go to freeonlinetradingeducation.com. I'll say it one more time, freeonlinetradingeducation.com. Go to the charts, go look for bull flag. We popped up higher than this trend line on Thursday, and then Friday stayed there. However, we have almost a tweezer top, but not quite, but we're starting to build what looks to be a high base. As long as we don't drop down below this trend line, and definitely not below the moving averages, if we stay above this area, we need to stay above 350 on the spiders, guys. 350 on the spiders. That will be nice and bullish for the markets. It will stay bullish. So that's what we're after. But I want to show you something that's of interest to me. If you look at the higher time frame, this is the weekly chart on the spiders. We come up, 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 and smashed our head on a major trend line. So if you go back on the weekly chart, just to put this into perspective, we have support here, and this goes back to March 2020. And then we go right here, and that's September 2020. We broke right here the week of October 2020, and then November we rally higher right into resistance. If I go to a line chart, you'll see a support, broken. Now support is acting as resistance. That's where we're at. You got to learn to draw the trend lines very, very well. If you draw them well, they'll serve you well. And if you look at the monthly, it's almost unfair to look at the monthly, but I want to show you something because we're only 7 days in, first week into the month, okay? So we came up, we broke a trend line. Now, let me put this into perspective. I want everybody to see this. I want you to understand how powerful this line can be. If you go way back here, we started finding resistance on this trajectory, and this is 2009. So in 2009, on the monthly chart, we have a lot of resistance. We found an area of resistance here, 2011. And that is somebody at my door. I actually don't know who that's. Anyway, it's my home office right now. And there's my dog. The joys of having a home office. So it is Saturday morning. We got festivities happening this weekend. Big party tomorrow here. Anyway, a lot of things happening. So if you look here on this trend line, we come up and smash our head here in 2018 again. So that resistance still plays. Resistance again here, 2018. We come over major resistance 2020 January. Come over, we broke it. You'll see here we broke it in August 2020, but we came right back down September 2020 and then dropped. This is called a jab. Usually those are very, very bearish. Usually anytime you break out of a trend line, come back into it, you'll have a significant drop to the downside. So what does that say with this big white candlestick here? We're only 1 week into, I don't know, what does November have? November has 4 4.5 weeks basically in it. We're 1 week in. The question is, will we drop lower in the next 3 weeks below this trend line? If so, we could see a sizable drop down to the lower trend line. So in other words, the spider could get down to 300 very, very quickly. So it would go from 350 to 300 very quickly. So everybody, we are all watching if the monthly chart by the month's end, going into the next 3 weeks, will we stay above this trend line? So in other words, we need to stay above 340. Ideally above 350 on the spiders. If we can do that, we should be fine going into the future. That will bode very well. However, if by the end of the month going into December, if we close below this 340 level, I could see a significant drop-off commencing. Okay, so there it is. That's what I'm seeing. Now, I went a little deep on that, but again, the weekly chart is already at major resistance. At these swing highs, a lot of activity at this level. We're back at it, plus the trend lines. Very important that we get over those. Ideally, I want to see us get over 360, stay above 360 for the bulls, okay? That's very important. If not, we could have some bearish activity to be looking at. Look here at the diamonds. Diamonds had a rising wedge. It broke down. This is a weekly chart, okay? So it's rallying up. We have some upside resistance. But let me show you the daily chart on the diamonds. You can see we had this big rally this last week. We're already showing weakness even before we get to this area of resistance, this trend line, and this area of resistance coming across. This is a great area to be looking for people to sell on the short side. NASDAQ, though, says something different. So check this out. We go into a symmetrical triangle. We break down to the symmetrical triangle. We immediately come back into the symmetrical triangle. And all you 401 mentor students, right there's the death hook. So there it is. You see it in formation. So you know what should happen next. If you look at the Russell's 2000, okay, look at the Russell's 2000. We're up at major resistance and already getting a bearish thrusting pattern come down to the downside. That is no good. That's a reversal pattern. Look for this to drop. If we make a new low coming into Monday, below 163, guys, that could spell trouble going into this next week. A lot of uncertainty out there, and a lot of people don't like uncertainty. I think the rally that we received was because we're starting to figure out who will be our next president here in the United States. Because of that, there's more certainty, less volatility. That's what you see. If you look at the financials, symmetrical triangle, it dropped, immediately comes back in. But what's interesting is this death hook did not plow through. It found resistance right at this line. So I'm really interested to see what the financials will do within this apex, this pinching area of the triangle. If we stay above the moving averages, that'd be nice and bullish. We gotta stay there. We'll see what happens. U.S. dollar has just been just crashing and burning, guys. The dollar does not like what it's seeing in the political market right now. However, Bitcoin has been on fire. Cryptocurrency has been flying. Just a parabolic move to the upside because of the political shakeout that's taking place. Silver, let's take a look at silver. Silver broke down, was very bad, but Thursday it healed itself. It got back up into this area that it needed to do. But Thursday and Friday, anytime people are starting to buy up silver and gold, that means they are nervous. Gold is up, but now hitting its head at a resistance area that we have to pay attention to. And if we go to stocks, now here are some stocks of interest, stocks that we can pick. I'll go to the tech stocks because a lot of people like the tech stocks. I'll be calling out trades, and if you want to trade them, great. You have to make the assumption I'm already in them, so just trade them. We are not financial advisors. We are educators only. Trade at your own risk. highly recommend that you get a trading mentor. That's your saving grace in the marketplace. If you look at Apple, we have a big symmetrical triangle. We broke down from the symmetrical triangle. We rally back up, and look how the bodies are caught up between the two trend lines here. It's trying to figure out what it's going to do. This market right now, Apple, you have to watch it. It is the most liquid security out there today. If you, as far as equity is concerned, this equity, this stock, Apple, is caught between these trend lines above the moving averages. That's really good. The question is, which trend line will win, which one will lose? If it loses, if this upper trend line loses, it will break out to the upside. That'd be very bear or bullish. If this one loses, it breaks down, then the bears will be in control to the downside. AMD is up. Nice, and it broke a trend line. I'll add that trend line just so you see it. Broke the trend line on Thursday. Good to see. Amazon was in a triangle. It broke down, looked really bad. This week, though, we rallied back up. Thursday, we got back above this trend line. Friday, we stayed. So this could be a death hook. This could get crazy. BABA came up, filled that gap. So BABA filled the gap, had a big drop. Earnings already took place, it looks like. Yeah, did it on the 5th. Had a surprise of minus 57 cents, or it dropped, but I can't believe people are buying into that. So, anyway, interesting. Baidu is up. Baidu is on fire, guys, but going into earnings, I would not be holding over that. Booking is just in a nice head and shoulders, but it could be a bull flag. Booking looks probably better on a weekly chart. If you go to a weekly chart, let me get rid of this. Couple of trend lines to clean it up, but if you go up, it's a shoulder, head and shoulder. This is bad news, but it kind of has that bull flag look to it. But I would stay away from Booking. No way I'd want to be anywhere near this. Cisco, stay away from Cisco. Not liking it. I'm not liking it. Catfish, high base, that's a buy. Look to buy that. eBay, oh, it's a buy. It's a bull flag, looking beautiful. Facebook, that's a buy. I'm liking what I'm seeing there. Google is a wait until it sets up buy. Google with an L, wait until it sets up a buy. I'm liking what I'm seeing here, breaking through those moving average or trend lines. That's helpful. GoPro is up 16% on Friday. That is a big move, guys. Just a monster move to the upside. Really nice. So that one, GoPro is a buy. Microsoft is a buy if we can get back above. Microsoft's a buy. MU is not a buy. Netflix is a buy. When I say a buy, it's not necessarily an immediate buy, guys. I'm seeing things that are going to play out that looks like it could be a buy. That's what I mean by that. Nvidia is a buy. Big pop, and it wasn't even earnings. Big pop. 3% move on Nvidia. Oops. Yeah, I just deleted something I didn't want to delete. I think. Hate when I do that. Oh, this is the weekly chart. Hold on. Oh, I went to a weekly on this. I need to relook at a couple of these. So we do have earnings coming up. So let me look at the last few here. I want to make sure I'm looking at these with fresh eyes, because I think I was, yeah. So I'd be looking to short eBay, Facebook. I'm looking at daily charts now. I was looking at weekly. It's my fault. It's Saturday morning. It happens. I'm a night owl. Google is a nice buy. I like what I'm seeing there. Google, I'd buy. GoPro. Yeah, it had good earnings. Wait for a pullback. You have to wait for a setup there, but it could give you one soon. Microsoft, yeah, I like that as a buy. MU, Yeah, wait for that to set up though. Let it give a high base or a flag or pennant or something. Netflix, I would sell that. Netflix. Did I say buy or sell on the weekly? So the weekly looks good to me. But you have to wait because this is a bear pullback. If this thing starts to drop, it could get nasty. Actually, it looks like it's just going to consolidate, guys. This is something on. If you're going to do long-term hold, I would say buy a Netflix. If it's not a long-term hold. You always got to look at the higher time frame. Nvidia, nice pop up. Wait for a setup. That could be good. Don't hold over earnings. Oracle, it's a sell. PayPal, that's a sell. It's just but the long-term hold, I would say buy. Roku, boom, had great earnings, looking fantastic. Look for that to pull back and buy Roku. Shopify, it's just in a lot of trouble. It's not something I would want to buy and try to make quick money on because it's in consolidation. Snap is on fire. Look to buy that. Wow, Tesla is a beautiful triangle. Let's see here. Let's look at Tesla. Let's look at Tesla. I likey. This is a great bullish pennant. It's a perfect bullish pennant. Perfect. So this is looking pretty good. I would be looking for a breakout to the upside, a play above 450 area. And Twitter is a sell. We dropped, broke support, came up, support's acting as resistance. So tweezer top, look to short Twitter to the downside. There it is. For those that are still with me, follow us if you haven't followed us yet. Feel free to follow us. Follow us. I mean, we only have like 11,000 followers on YouTube. We don't market. We're not out there doing things. You won't see ads anywhere. We just crank out a video every once in a while, and every once in a while, 3 days out of 30, we'll teach. But market's crazy here in the U.S., and a lot of fighting taking place politically, and that's bringing some unrest. So it does kind of surprise me that we had a bullish run this past week. It does surprise me to some degree because of the uncertainties of who will be our next president. So the thing that jumps out at me, though, is we did rally. I think what we were seeing, as I referred to earlier, is that because it looks like Biden may be our next president, because of the certainty coming in, it brings less uncertainty, so volatility drops. Because volatility drops, you should see a rise in the markets. So that's kind of what we're thinking, but it really doesn't matter. A little tidbit for you in the trading world is, don't get hung up on what the news is and what you think is going to happen. I used to follow the news very closely, and then I would follow the economics of what was happening really, really closely, all the reports and news, and I would try to surmise or guess or put together on what would happen next. And I was constantly trading what I believed opposed to what I was seeing. So because of that, my trading would suffer. I would even get to, I would go into level 2 trading. I would listen to the chatter taking place in the pits back when that was more of a thing. I was doing all sorts of things, and I realized that I was wrong more times than I was right. So in trading, we have to, it's a business, so we have to trade with the probability stacked in our corner. And the only way to do that is to have the odds in our favor. The only way to have the odds in our favor is to have rule sets in place and a methodology that we use that increases our odds, namely that increases our win ratio, and we have a solid reward to risk ratio. If we can dial in our metrics and treat trading very much like a business, where we're watching the numbers and we're trading and trading well, and letting the trading and trading well, let the byproduct of that be profitability. So that's what we're doing. You have to be able to not only make money in the markets. What's more important is not losing money in the markets. So if you have a behavior that keeps nickel and diming you, you just keep making the wrong decisions in trading, you have a problem to fix. You have a problem to fix. So you have to ask yourself, what's the fastest manner, the most probable manner of fixing that problem? Yeah. How much time are you willing to put into fixing your problem? How much money are you willing to invest into fixing your problem? Trading can be a really expensive hobby. I know from experience. My first 2 accounts as a trader, I blew. My first 2 accounts were gone. I knew I had to quit trading because it was an expensive hobby or do something different. And I chose to find a trading mentor. That's what I did. And I know without any shadow of a doubt, that's what you should be thinking about too. That's what you should be thinking about. But we have holidays coming up. We have Christmas coming up. We have a lot coming up. A lot of time. There's a, it's funny. I was talking with one of our students here recently. This gentleman has a lot of money. He's a hard money lender for banks, for you guys understand what that is. Okay. He's one of our students, and we were chatting this last week, and we were talking about the reality of all the money that's at our fingertips in the marketplace. There is money all around us. We just need to know how to put the net out there to grab that money, to grab those profits to bring in. Money is all around us, especially in the stock market. It's out there. You have to be better positioned to take profits than anybody else out there. You have to be, and that has to be done on a consistent basis. Because if you hit a home run every once in a while, you're no better than somebody that scratches off lottery tickets. You're no better than that. And if you're treating your trading like scratching off lottery tickets, if you are the type who, if you go after and you buy lottery tickets and scratch those, you are not right for us as students. Please don't even inquire. And I say that with all sincerity, not meaning to offend. Okay, that's not my point. My point is, man, when it comes to the traders we're producing, we're looking for straight up killers in the marketplace. The only students that are straight up killers in the marketplace are those who intellectually understand that the odds are stacked against you in certain games of play. Lottery, blackjack, roulette, you can go on and on, okay? If you succumb to those temptations, then that gambling mindset will be very damaging to you in the trading in the live markets. There's no way around that. However, if you're more pragmatic in your approach to life and purchasing and buying, you're not the type that buys the lottery tickets. You're not the type to waste a whole night sitting at a gambling table. If you are more disciplined as an individual, then those individuals can take a winning system and thrive with that. Yeah, especially if you're engineer-minded. If you're engineer-minded and you can look at these charts and you know that they can be quantified, you just know it intrinsically, then yeah, you make for a pretty good student of ours. Especially if you're a lefty. I don't know, for whatever reason, we get a lot of lefties that come through our mentorship program. So, but it's crazy. I hope these little nuggets of truth land well with you. and bode well with you. I hope that they germinate and they become a reality to your reality. Okay, I want you, because some of these monologues I've been doing at the end, I put on my mentor hat, and I'm coaching you ever so slightly to be thinking differently. You have to stop doing what if in the last year, look at your trading, and if you're down money, you have to stop that. You can't do that trading anymore. You can't hope that just one more indicator oscillator will fix it. It will not fix it, I promise you. It will not fix it. The more indicators and oscillators you add, the more you bastardize your system. It slows it down. Look at an indicator and oscillator as a wet blanket. They are lagging by definition because they take historical data, price action, and volume to come out with this cute little formula. So the event has to have happened for it to have data to show you something on the indicator or oscillator. If you add those, the more you add them and you wait for them to all line up, you will perfectly buy at the high every time. And it will drop right after you get into them. So the secret is divorcing yourself from indicators and oscillators. Wean yourself. They're great. Their indicators and oscillators are perfect training wheels. Every full-time trader we have produced and or know in our circles, you will see a very clean chart. When you look at their charts, they're very, very clean. You don't see indicators and oscillators all over the place. Amateurs who are still learning try to, they put on more and more training wheels. They have a bike with 15 training wheels to try to. You will not win a race on a bike with 4 sets of training wheels attached to it. I promise you. And trading is a race. So that's it. I am done. If you made it to the end, say made it, let me know. That's crazy. I mean, you are half crazy to be sitting through and listening to me drone on and on for nearly 30 minutes. But I appreciate you. If you do, listen, I wish we were friends. Come into our ecosystem, get to know us, be part. If you decide you want to be a trader and you do decide that you want us to help you along in that journey, I welcome you to our ecosystem. Please, it's fun. It's a small world. Very few people know this language. So what we have to do is, come together, and there's comfort in being around people that know the same language that you do, been trained the same way. It's very comforting to be part of the inside. So we welcome you if you'd like to be a part of that. Take care. We'll see you guys later. Bye.